Hey guys, Crypto Sunday, and you can probably guess this has been a rather red week. We've had sort of the Bybit hack, aftermath still happening. They're selling some of their coins, it looks like, using mixer services and all sorts. And yeah, a few sort of bits and pieces of news this week, but it sort of seems to be macro events, stock market drops that are causing crypto to drop with it. So yeah, down about 14% for the week, about £56,000. So yeah, it's rather rough. This sort of mostly across the board. Bitcoin sort of down almost as much as some of the altcoins, but yeah, we'll have a look at some news. So looking at the CoinShares report, it was relatively negative. We'll get a much larger one than this. I have to extend the chart a little bit more down to here, I think, tomorrow for next week's video. But we had 508 million in total outflows. Yeah, it was sort of mainly Bitcoin from the looks of it. Quite unusual, really. 571 million in outflows for Bitcoin and inflows into everything else. 3.7 into Ethereum, 3.1 into the multi-asset funds, 9 million into Solana, and 38 million into XRP. It's still getting an awful lot of love. AUM, I expect, is dropping just with the price dropping, but hell of a lot of inflows. 200 million inflow year to date. That's rather strong. And then small inflows into Sui, Litecoin, a little bit into Cardano, and 6 million into others. So, yeah, relatively strong on the altcoins, I suppose. This will probably be a complete wall of red next week, but yeah, I thought that was interesting. And some by country, you can see it's sort of relatively flat. Most countries in single figures, except Germany, 30 million inflow, and Switzerland, 15 million inflow. But small outflows from Brazil, Canada, and Hong Kong. As far as this week goes, it has been very, very negative. Full week of outflows for BlackRock, which we haven't seen for quite a while. Obviously, they're still sitting at, I think, $50 billion. So, yeah, looking at the total of this, about 1 billion in outflows for them. Not all that bad, considering the drop that we've had. So a lot of them still staying fairly strong-handed, quite a bit out of Fidelity as well, and obviously some of the others. So we had 539 million on Monday outflow, $1.1 billion outflow on Tuesday. I think that's the first $1 billion outflow, and then 750, 275 outflow. And then Friday, we had outflow out of BlackRock, but inflow into ARK and Fidelity. 193 million into ARK, so that's 7-8% of their total inflows that they've had since the beginning. So that was quite strong, and did end up a 94 million inflow day, just to sort of cap off what was a relatively bad week. I suppose on Ethereum you would technically say slightly worse, but on a much smaller scale. Full week of outflows, but there were no net inflows to any of the ETFs on any day. So, yeah, I suppose obviously the numbers are smaller, but you could see that as a little bit more negative. Even some of the smaller ones, look at the sort of 21 shares, VanEck, Invesco, and Franklin have had no inflow or outflow for, 10, 15 days. You might see that as positive, I suppose. What little they have are sort of longer term holders. Even with this downturn, they haven't been wanting to sell, but I think I would see that more as no activity. This 21 shares one has had just under 17 million of inflows. Invesco won 20 and Franklin 37. So it's not a lot. I think, a lot of people have sort of said that they would want 50 million, 100 million maybe to have these be profitable, because they're not exactly huge expense ratio. So, yeah, Ethereum not exactly doing super well. But while price is down, the actual news just seems to be sort of getting better and better. The SEC seem to be essentially wiping the legal action that the previous administration has done off the face of the earth. They've sort of, in the last couple of weeks, dropped an awful lot of cases. Lawsuits dropped just in 2025. They've dropped the consensus one that was relatively big, 20 on the 28th of February. So that was concerning MetaMask, Justin Sun and Tron, obviously a controversial figure. They dropped that. Gemini for the sort of staking and lending platform stuff. OpenSea against NFTs they dropped as well. Binance, they have filed a joint motion. The SEC and Binance filed a joint motion to pause the litigation for 60 days. Obviously, they're not a US firm, so it's unsure sort of how that will go down. Coinbase, they've basically dropped without any fines, charges, or anything. It looks like so. That was a very strong one. I think the US really want to make Coinbase their sort of poster child, I suppose, of crypto. Robinhood had an investigation into them as well, and yeah, they're the sort of more stock trading side, but they do an awful lot of crypto, and yeah, they seem to emerge unscathed, as they say. Uniswap, people seeing as very, very, positive, potentially for DeFi, Ethereum, and Solana, sort of DeFi potentially. And yeah, they're sort of talking about whether Kraken's lawsuit could be not too far away from being dropped. Bittrex, don't think Bittrex are particularly big anymore, but they're sort of talking about potentially those. And then I guess the big one is Ripple, whether the selling of XRP to institutional investors was an unregistered security. So yeah, they sort of appealed the SEC appealed their decision and sort of prolonged this case. It looked like Ripple had sort of largely got off scot-free. They were saying the court was saying XRP itself isn't a security, and they potentially would get a fine for selling to institutions. The SEC appealed that, and I guess the new breed, including Hester, are looking to whether they just drop the whole thing, I guess. So it is noted that the SEC dropping these are mainly tied to classification of various digital assets as securities. They seem to be sort of walking that back and creating a clean slate, and then designating what is a security. Hester Pierce has sort of come out specifically on meme coins and sort of essentially said, just because you lose money on something doesn't make it a security. You can lose money on lots of things. Gambling, obviously, at Las Vegas, everyone sort of points to. You can lose your entire life savings at Las Vegas. That's perfectly fine. But losing sort of $10 on an NFT or something is shouldn't be cracked down on quite so hard. So interesting to see where they go with this. So some potentially positive news for Solana. CME Group planning to launch futures on March the 17th. So this sort of under the Biden administration was seen as the sort of route towards getting an ETF. You get futures, then you launch a futures ETF, then you launch a spot ETF because you've got a futures one. I think probably this SEC are a little bit more friendly towards ETFs in general, so it won't necessarily be required to go down that route, but it's a good step. I'm not seeing XRP futures. Can't remember whether they have listed that. I think XRP was sort of seen to be ahead of Solana in the race for an ETF, but yeah, I thought this was interesting. I do like CME Group, but obviously futures for Bitcoin certainly did mark the top of Bitcoin in 2017. Obviously, the launch of futures means it's far easier to short in a sort of institutional way, and I think long term it is required. So yeah, we'll have to see. For March the 17th, there's several ETF filings sort of in already. and they've been, I think, delayed once. So yeah, we'll have to see whether these futures can pave the way, basically. This was good as well. BlackRock adding its IBIT ETF to one of their model portfolios. So they create these sort of model portfolios for people to follow, basically, and you can just track it sort of passively. Whatever BlackRock choose to put in there, you would essentially automatically buy, and some people sort of take those and maybe use them in a little bit more of an active, use it as a baseline and then make adjustments, or sort of not actively track them one-to-one with whatever BlackRock do. But yeah, they're adding Bitcoin to that. To the alternative asset one, which is $150 billion in sort of total assets under management, it looks like. Obviously, they have like 11 trillion in total assets, but yeah, that's sort of a good start. They're adding a 1 to 2% allocation, I suppose, depending on risk. To the IBIT is $48 billion now. That's potentially a decent amount of money to be added to it. So they're saying more and more advisors are wanting to allocate more to alternatives, but they need guidance on how to size, scale, and rebalance the position. A little bit sort of surprising that they wouldn't sort of be able to assess that themselves, but they're looking to BlackRock for this, and yeah, they're saying the volatility is a core reason why they've mapped out a 1 to 2% weighting as a reasonable range. Anything beyond 2% would sharply increase crypto's share of the overall portfolio risk. I would sort of think you could just maybe rebalance it a little bit more often if, crypto sort of rockets up and it becomes 5% or something. You don't want it to be 5%. Maybe just rebalance and yeah, sort that out. I would think sort of making it 1% just because you don't want that volatility seems a little bit short-sighted, but that's people in the crypto industry, I suppose. Interesting to note that BlackRock are sort of suggesting trimming long-term bonds and sort of moving towards medium term, I suppose, not wanting the exposure to long-term. And a spokesperson confirmed that they are still stocks over bonds heavy, US over international, growth over value, and tech over the rest of the market. But the magnitude of each of those directional views is something they look to reduce. So yeah, still basically looking positive risk assets, which you would think is good for crypto. I think everyone is sort of getting a maybe a little bit morbid fascination with the liquidations as well, but yeah, I can't help but look at them. CoinGlass sort of have some interesting metrics for free. You can sort of look at various exchanges. Binance sort of have a fair bit of perpetuals and leverage and that sort of thing. But Gate.io seem to be sort of one of the heaviest. You can sort of come on here and it gives you what I think is a map of where people are getting liquidated at what price, sort of over the last 30 days, and you can even sort of drill down. You can take off the sort of cumulative numbers, and you can see how much leverage they're taking. So you sort of take off 5x, 5x is making almost no difference other than this small amount here. 10x, people aren't really using 10x, which 10x leverage is quite heavy. 25x, there is quite a bit, but it's these two, 50x leverage and 100x leverage. So the sort of yellow here, is a reasonable amount. You sort of got, $170 million at just one small price level in the last 30 days, if that's how I'm reading it. And then this sort of enormous, great big bars here, we got $340 million worth of leverage at 100x. So, deposit $1,000, it goes down. Bitcoin goes down 1%, and you lose your entire $1,000. So, Why people think that is the way to play Bitcoin, I have no idea. But yeah, shows the amount of sort of optimism or insanity that is still in the market. Binance, as I say, seems to be, I guess, maybe a little bit more sensible, a lot less liquidations. Scale only goes up to 130, 120 million. So, you're sort of still getting a reasonable amount. But, this across all exchanges just seems a bit balmy. And is the reason, I think, people like Bybit, everyone was sort of saying, how are they paying their rebuying the Ethereum that they got hacked on the exchange? How are they buying it? Where are they getting the money from? And I think you would point to this, so somebody loses, or a load of people lose $160 million. That basically all goes to Bybit. They're sort of lending them the money and taking it when people inevitably lose all of their money. 100x leverage is just going to be gone within minutes, potentially sometimes. So yeah, that is how they paid for it. And so coming to the bloodbath that is coins for the week, Bitcoin was down 10.5%. Solana still sort of taking a pasting, 16.8% for the week. It was a great deal worse than that at points. Ethereum did end up 20.5% for the week, not performing at all well, although it has sort of, I think, regained a little bit of ground against Bitcoin, sort of, well, not over this week, but from the bottom, I think. And Chainlink 17.8% down, Jito 14%, so my new Solana ecosystem tokens obviously going down with Sol, although some less. Helium down 14%, Metaplex down 12.3%. Honey token, I think that has had sort of a fairly rough ride recently, but it is only down 5.4% for the week. And then Radium, so on the news that Pump.Fun are potentially making their own market making service, potentially won't be sending coins to Radium. That is down 47% for the week. So that's rather rough. I think that is potentially overblown. I think, Pump.Fun's amount of Radium's revenue is certainly not 40%. So, yeah, that seems a hell of a drop. And I think Radium can still, potentially do well. I guess there's potential for them to move outside of Solana as well. So, they could maybe start up on other chains. But yeah, we'll have to see. I'm not sort of buying the dip on these coins just yet. I've still got a little bit of finance stuff to sort out, potentially credit card bills that I thought I was able to defer that I might not be able to. So yeah, haven't sort of piled into averaging down on all of these coins just yet, but we'll see, maybe sort of next couple of weeks. So yeah, leave your thoughts in comments below and like and subscribe. See you soon.